Good afternoon. Today's video is a review of the exhaustion day, where the move ends and traders get trapped. If expansion day is where the money is made, then exhaustion day is where it's taken back. It's the most dangerous phase of the three market cycles. Not necessarily because the market is unclear, it's because it's too clear. On this day, traders watch for topping and bottoming patterns and they prepare for counter trend or mean reversion plays. This is the day where smart money starts exiting and capturing profits while late traders get trapped. What is exhaustion day? It's a reversal-oriented session. It's following prolonged overextended trends, especially after multiple expansion days where the prior trend has traveled just too far. Price reaches extreme highs with volume, but shows signs of fatigue such as divergences, failed breakouts, or absorption at key levels. New traders enter as the move appears unstoppable. Then momentum begins to fade, often leading to sharp reversals, profit taking, or distribution. Again, this is where smart money starts taking profits and reversing their positions. Exhaustion days are not the start of the move, it's usually the end. The market has consumed momentum and needs to rebalance now. What leads to exhaustion day? In my previous video, we reviewed expansion days, which is most commonly a strong directional move looking for liquidity. Expansion days continue their powerful move until it travels too far, it becomes overextended, and liquidity has been consumed, and then the natural order of things is for the market to rebalance. During the overextension on expansion days, we see momentum begins to weaken, which leads us to exhaustion days, where the rebalance begins, and again, smart money starts to exit their positions. It's a natural progression in the market structure cycle. Exhaustion doesn't come randomly. It's a direct result of expansion days' strong directional moves. What our backtesting shows is that after studying hundreds of sessions, using our proprietary cycle context, our algo level interactions, the gap positioning, and the range extension behaviors, the data for exhaustion days reveal consistent and predictable patterns. We see diminishing follow-through where a continuation just becomes unreliable. We see breakouts fail, pushes stall, and moves they tend to reverse very quickly. We commonly see extended range with a weak close, such as price extending early but struggling to hold the extremes, often closing off the highs or the lows of the day. We see increased reversal probabilities, trapped traders with late entries. We also see those late traders getting punished trying to buy the breakout highs or the lows only to find themselves getting stopped out. How do we identify an exhaustion day? It's best to not try and guess the tops or bottoms. We look for specific conditions such as, did the prior expansion day offer a strong directional move? Is price overextended and far from equilibrium and other key levels? Where's the chart in relation to our algo levels? Is it hitting resistance or support? Is there weak follow-through, such as failing to reach a new high or a new low? What about the gaps? Is it continuing as expected or reversing? When these conditions align, we can expect exhaustion, not continuation. How do we trade exhaustion days? The first item is to stop chasing breakouts or getting in late during an extended move. On these particular days, getting in late has the lowest probabilities. It's ideal when trading to keep probabilities favored on your side. Be aware of a failure move. Did the trade fail the continued move where no breakout occurred? Did it break above the recent high, then reject? If so, consider a short position. Did it break below a recent low, then reclaim that level and hold? If so, you may consider a long position. Reducing size on exhaustion days, trade with smaller size for sure. Take profits faster and observe tighter risk. Remember, conditions are less stable on this particular day. Exhaustion days, they lead to the reset day. So always be on the lookout for a transition and prepare for the next cycle. What does exhaustion day look like in a live environment? Using a textbook setup example, we observe the market opening and then it continues its prior trend, pushing into new highs or new lows. We then begin to see the momentum slowing down, the breakouts, they fail to follow through, and the reversal begins developing by either turning into chop or it starts a move in the opposite direction. It's not uncommon to see the market look strong early on or soon after it falls apart completely. So be ready when this does happen. Why traders struggle on this day? We all know that psychology plays an important part when trading, and that it's easy for a trader's discipline to break down. They find themselves chasing a subpar move because they missed the prior big move on the expansion day. It's the worst timing possible. Remain patient. There's always going to be another good setup around the corner. Traders find themselves believing this time it's different. The data shows that another breakout on an exhaustion is likely to fail, so trust the data. So you won big on the prior extension day. Don't get too aggressive on exhaustion days. Find yourself giving it all back. Size down and take quicker profits. Be aware of what day in the cycle you are trading in. Stop ignoring the context. Don't trade blindly, unaware of the phase shift that is occurring. The full cycle of the exhaustion day. By the time you review this video, you should have already reviewed the reset day video where liquidity is being built and consolidation occurs. You should have also reviewed the expansion day video where the move is looking for liquidity resulting in a one-sided directional move. Exhaustion day ends the move and usually traps traders. Knowing the difference in the three cycles gives you a better understanding of how the cycles reset. It also teaches you to stop trading every day the same way and gives you the knowledge to adapt to the different market phases. The real edge. Exhaustion day, it's about protecting yourself, positioning correctly, and not looking for big wins. It teaches you to avoid chasing trades. It helps you expect and recognize price failure. And most importantly, remain patient after an expansion day while you wait for the next opportunity. Through advanced insight using our algo levels, we know exhaustion days near or in our zones where price extends into higher time frame resistance or flushes into strong support, and then it begins to show weak continuation, whether it's a failed long or a failed short. This is what traps traders, and new positioning at that point begins to start. Trading can be a successful business model if you stay sharp, you stay disciplined, and you stay ahead of the shift. Be sure to study and fully understand the three cycles. Learn it so you can earn it. In the next video, I'll discuss the market structure.